Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Good morning. Welcome back to the live stream. Thanks for being here. Happy Tuesday to you. Hope you're doing well. And hope you're getting ready for what is likely to be a pretty busy second half of the week. I mentioned this yesterday, but really a lot of the interesting stuff this week is happening Wednesday, Thursday, and Friday. Tomorrow we get the FOMC meeting minutes, which is a little bit of like the scribe notes of what's gone on in private Fed meetings. That's always a really interesting report. And then we also have on Thursday and Friday, the Jackson Hole Symposium, which is a Federal Reserve annual meeting that happens in Jackson Hole. Jackson Hole's in Wyoming, I believe, or is it Montana? I can't remember which state that's in. Anyways, yeah. Couldn't get the free Edge Finder. Don't worry. We've got 700 comments, 700 emails, messages from people waiting to get their access. Our staff just got in for the day. Don't worry, we will be fulfilling applications this morning. So stay patient. For those of you guys who applied for the Edge Finder free week, that is still available, but please be patient as we work through all those applications. I counted them up yesterday, or looked at how many we had. Since yesterday, we have had 811 applications come through, and there are 3 people handling those applications. So what does that put you at? Like 275 to 300 applications per staff member. So give us some time. We are working through it as fast as we can to get people access to the Edge Finder for the free week event. If you'd like to add your name to that list, we'll drop the link really quick. For those of you guys who are just tuning in, Edge Finder is free this week to use. All you have to do is apply. If you'd like to apply to get access, we'll drop the link here in the chat for you as we speak. There it is. Edge Finder free week. And I'm definitely glad we did a free week because it's going to take us a minute just to get everybody access set up. I see sells on gold. All right. That is a brave warrior stepping up to sell this thing. Gold to me is a rocket ship. Although maybe you have a reason for selling gold, for me, there is not really much of a case for selling gold. It's hitting all-time highs today yet again, 25.26 per ounce. What an impressive beast mode freight train this thing has been. And again, I say that, I know there are going to be people who say, I want to short gold. It seems too high. But let me warn you that in my years of doing this and talking about this, during this periods of time, I can tell you that every single day on the YouTube channel, I would be covering gold, talking about how, I thought I really was very bullish during that time. And every single day you would get people commenting, no, it's gone too far. It's too overbought. It needs to retrace. It's gone too far. And I'm telling you, if you started shorting over here thinking it's gone too far, it never came back. It never even came close. If you shorted over here, it's never come close, right? So my point is, what typically happens when you get these really big moves in gold to the upside or to the downside for that matter, you get a lot of retail traders. And I'm not trying to pick on anybody, but this is just observably what we always see happen over and over and over. When trends start to really pick up, retail traders think, oh, it's gone too far. I've got to short this thing. I'm going to make so much money because they're not tricking me. It's going down from here. But again, maybe the big mystery of this is when stuff is trending up, don't fight the move. Because again, that is, I can tell you confidently from my experience and watching retail, positioning for so many years, if we see these kinds of moves, trying to fade them is a trap. in my experience, in my view, when you see big, strong fundamental moves higher on gold, you don't try and short that, because again, oftentimes it just does this and completely wipes people out. If I was working on that, I'd hate you. Well, Yusuf, you may not be wrong. I very much appreciate my team, and they're doing a wonderful job handling all the applications. They are, they can handle it. They're super awesome at what they do. And as you could probably imagine, there's a little bit of frustration when you're dealing with like handing out freebie stuff. You get some not so fun people to deal with, some people who are like really entitled or impatient. But the good news is, for people who are serious about trying the Edge Finder, we have a lot of people who are very constructively taking advantage of this free week, and they're actually giving it an honest try. And they may end up buying the tool at the end of the week. We've already had some people who are like, this tool is amazing. I want to buy it. What kind of discounts can you get me? So yeah, it is a lot of work, and it's a little bit, these weeks are, there's some fun aspects and not so fun aspects, but that's, we're a software business. Our goal is to share our tools, and this is a great way to do it. So again, if you missed it already, I mentioned this. If you're just tuning in, we're doing the Edge Finder free week this week. So if you'd like to try out the Edge Finder completely free until Friday, it is available to everyone. All you have to do to get access is apply using the link that we're going to drop in the chat right now. There it is. It's 1 full week free until the end of Friday. And let me clarify that. It is only available till Friday. It is shut down on Friday, no matter how many days you've had access to it. So if you get it on Thursday or you get it on Friday, you'll still only have it Thursday and Friday. But if you apply today, we're going to be going through applications all day long today. What's TLT looking like, Nick? Sure, let's look at TLT. TLT is giving me a little FOMO because I was long in this one and missed the good run up. I made some money on TLT, but I left a lot on the table on this one. So in terms of TLT, I think it does continue to push higher overall. I was looking for this pullback to get back involved and did not get my entry point. Seems like we're still moving higher. So right now, what I'm looking at with TLT is either a break and retest of the highs, or if we do come back to pull back into that 94 level, I might be a buyer in that area. But until then, nothing really to do from here, but it does look bullish to me. Can you analyze today's news? Yeah, let's see if we have any. Do we have anything today? CAD CPI, trimmed CPI. Oh, this is good for gold. That's probably why gold is up today. CPI came in lower than expected for Canada, showing more disinflation trends globally. That is a positive catalyst for gold, and that is why it's up almost another 1% today. My goodness. Another one I'm feeling FOMO on. I've got the indices on the long side, which has been a really great trade for me, but I can't help but feel a little bit of FOMO watching gold run off again. Again, super, super bullish price action for gold, taking out these highs. What a nice, rip to the upside gold has been. I took gold long around these areas with the stop loss just below. That ended up being a really nice trade. I stopped out when it trimmed back here, so I made some good money on that one. Tried again, took a loss on that one. So I took one good sized winner, one good size or small loss, and then I wish I had stayed in it, because look at gold now; it's just really continued to rip higher. If we get a pullback on gold, then I think a lot of people are going to, get nervous about it. But for me, that would be a buying opportunity. So if we get a move back into 2470, 2450, that range here, to me, that would be an opportunity to buy the dip on gold. So, yeah, gold just looks super strong today. Congrats to anybody who's long gold. And if you are short gold right now, I just want to say, I said this yesterday and the day before, and I'm really not trying to pick on anybody, but here's what you need to understand about trying to short gold when it's ripping through the all-time highs. Trying to short gold as it rips to new all-time highs is one of, if not the hardest trade I know of. It might be harder than trying to short the S&P 500 or the NASDAQ going through all-time highs. The reason I say that is because when gold makes new all-time highs and it's really on a move, when it's really moving, it is just like a one directional trade. This is why if you try and short rips and buy dips on gold, you might do well when it's range bound. You might think you're all that during when it's going back and forth. But as soon as gold trends, it shocks everyone, myself included. And I've been watching this thing for years. When it really trends, it just shocks everybody how far it trends. That's why, my trading strategy works pretty well on gold, where I like to trail stops and trade with the trend because it oftentimes gives me these really nice moves. I'm not in this trade, but let's just pretend for the sake that I was. Again, it's a nice thing to daydream about. I wish I had taken like a trade like this, right? Because then what I would have done is I would have trailed my stop here, and then this thing could just continue to rip, and I could continue to trail stop losses when we put in higher lows, so on and so forth. So to me, if you're shorting this thing, I don't know what the strategy is. I don't understand it. I don't understand why you would short this thing right now. We have central banks globally seeing disinflation and are leaning towards rate cuts. That is bearish for fiat currencies. Printing of money is nowhere, stopping at no time in the future here. We have central banks globally buying aggressively. You have geopolitical tension. You have election uncertainty. I don't see the bear case for gold unless you think the Fed is going to start raising rates, which again is like a 0% probability right now. I don't see it, right? I think gold is cheering the rate cut story coming true finally. And to try and jump in front of that and say, yeah, this is the top of gold, has been beating the crap out of people for months now. Guys, gold is up so much this year. Look at this. This is a remarkable year for gold. You're talking about a move of like almost 23, 24% from the beginning of this year. That is more return than the S&P 500. I think that's even comparable to the return of the NASDAQ. These things, trying to short this rally this year has been absolutely wrong. Rate cuts are coming. Uncertainty is everywhere. You have stuff going on in the Middle East. You have stuff going on with China's economy being uncertain. You have the Chinese central bank buying a ton of gold. You have central banks wanting to cut rates all over the world. There's a number of factors that continue to push gold to new highs. And unless you start seeing some of those things unwind or change directions, I don't see the short trade. And I'm telling you guys this so adamantly because every day I read the comments and every day people are saying gold's going down, gold's going to crash, gold's going to sell, gold's going to sell. And then here it is all year long. I've been reading those comments and all year long gold rips to new highs. Just hear that. And if you're somebody who is like, I'm just going against the trend, what am I doing? Just pause and make sure that what you're doing, you've really tested thoroughly, because it is very easy to fall into the trap of thinking this looks so high, it's gonna sell, and chasing that like obsession of trying to call the top or call the bottom. It's a trap for a lot of traders. Hopefully that resonates with some of you guys. I'm really not trying to pick on anybody. If you are bearish, I know from personal experience, it doesn't always feel good to hear people talk against what your positioning or what your thought in the market is. But I also think it's important that if you have a bias in the market, that you should be able to take some criticism and you should be able to hear someone who disagrees with you. For me, when I was going long the NASDAQ over here, I was long a couple different times very early and took big losses. I took several losses in a row trying to buy the NASDAQ and being early to the trade. And I was wrong about those things. People who were bearish during that time probably made a lot of money, right? However, I could hear that criticism and not completely freak out. There's criticism all over the place. In my comment section, I was hearing from other very thoughtful and intelligent traders who are bearish. But I know my strategy, I know my rule set, and I've done a lot of testing on what I do. So I stuck to the plan and it's worked out very nicely in the end. Didn't feel so good when this was happening, right? kept stepping up and swinging the bat and taking losers, but you can't stop swinging the bat. If you're ever going to hit a home run, you got to keep swinging. But keep swinging only makes sense if you've actually practiced and you've actually studied what you're doing and tested it thoroughly. So for me right now, I am bullish. These are some of my current positions. I am long. Pretty much everything I'm trading right now is indices. So I'm long the S&P 500. I bought the dip on this one. SMH, this is a semiconductor ETF. But you have to understand, I've got these really nice trades running, but the losses here during this time were painful. So I had a drawdown period prior to finally catching the right trade. But IWM is another one that I'm watching. This one's down a little bit here today. So I've got a couple good trades running, but we will see if they can continue to follow through. You do have Jackson Hole Symposium this week. That's the Fed meeting, which will be very, very interesting to see where the Fed is at. Current top setups on the Edge Finder. Let's see what we've got here. I'm going to just take out the minor currency pairs for a moment, just because personally I don't usually trade minor currency pairs. We have dollar yen getting a bearish reading. We'll keep an eye on that one. Gold continues to get a bullish reading, so I've mentioned that I'm looking for possible pullbacks on that one. NZD USD getting a bullish reading. The DAX, the German DAX, getting a bullish rating. Pound USD getting bullish. So we've got one bearish reading and 5 bullish readings. So let's take a quick look really fast at the dollar against the Japanese yen. Let's see what's going on with UJ this morning. So in terms of price action, I talked about this yesterday. This 38.2% retracement held really nice. Sellers came right in there and pushed off this level. I'd be very curious if you get like a break through this level here, this bit of consolidation. If we break underneath that and close underneath that, could see the dollar yen actually trend back down to the lows based on this price action we're starting to see. Again, big slide this week, or last few weeks, really. Last few months even, going back to July. So we'll see. But dollar yen, I would lean more on the bearish side. If you get a push up into this 38.2 or this the 50% retracement level, I'd have a little bit more of a bearish bias in those areas. So those are some setups I'm watching on that. And let's take a look at some of these. So I already talked about gold. I'm looking for pullbacks if we can get it to start looking for long setups. Let's look at NZD USD, currency pair here for this morning. Bullish rating on this one. Not really seeing anything too exceptional on this one. Maybe if you get a break through the highs. A little bit of resistance where we're currently at. So maybe if you get something like this, breakout here, retest, maybe continuation play. Just testing this resistance for now. So we'll see if we can get a breakout here. For those of you guys who entered the Edge Finder free week applications, please be patient with us. We have probably at this point almost 900 applications that have come in, and there's 3 people handling them. So we just got into the office. So if you applied for the Edge Finder free event that we're doing this week, please be patient on us. Our emails and support line was flooded with people saying, hey, I haven't gotten my access. So we know we are working on it as fast as we can. We are handling those applications on a one-on-one basis. So it will take us some time. We're doing them as quick as we possibly can. If you're not already applied for the Edge Finder free week event, we'll drop the link here in the chat right now. We are offering people to try out our tool until the end of this week. It is free to use to everybody who's watching the stream right now. So click this link and you can apply for the Edge Finder free week event that we are doing. And again, we are handling those applications one at a time. So please be patient with us. We've got a couple people working on that. Hi, Nick. I applied. Leads me straight to the trial, which is not the offer, right? I'm not sure what you mean, Bob. Not quite sure. If you use this link, just know that someone from our team will send you an email or a WhatsApp message, whichever you prefer, as soon as you have applied. If you've already applied, there's no point in applying again. It won't speed up the process. All right, let's keep going. Let's look at some more charts. The German DAX is something I actually am interested in. Let's look at German 40 for a second. So the DAX is near all-time highs, I believe. We've got some resistance up ahead. Yeah. If we take out those highs, I'd be really interested. The DAX is the German stock market, and it is one that I would like to be a buyer of. I'd just like to see it take out the highs. That'd be awesome. If we get something like this, big break here in the next few weeks, DAX might be a play, especially if it keeps having the edge finders bullish consensus. Pound dollar, let's look at GBP USD. Pound dollar is also at a pretty interesting pivotal spot here. Look at the rip that the pound has had in the last few days. My goodness. So we're testing resistance on a lot of these charts here today. I'd be very curious if we get more risk on going into this market, if people are more optimistic about the future here, about the global economy, the pound against the dollar could continue. And if it breaks those highs, I'd be very interested in looking for continuation plays to the upside. Pound USD might have more upside. We're trading at 1.3017, which is I think that's an all-time, or not an all-time high. A high of the year is pretty close, around 1.3040. So we'll see if we can take out those highs. Again, if we break through those highs, I really like the idea of looking for pullback plays on the pound against the dollar. So I'll keep an eye on that. So that's the current setups from the Edge Finder that I'm looking for. And for those of you guys who are trying the Edge Finder this week, I had some requests, people saying, Nick, how do we can you give us a basic run through of how to use the Edge Finder day to day? So hopefully you just saw me do some examples. The Edge Finder, basically what we look for is, this is how I use it in my day-to-day stuff. So I will narrow down the search to things that are getting a bullish or bearish bias. And that is denoted by the score that the Edge Finder has, which calculates each one of these columns, right? So all of the economic data that we track, seasonality data, the commitment of traders report, all of this stuff gets imported. Our system goes and grabs all that data and then does internal calculations interpreting how those aspects impact the final score. So a very simplistic example would be that for the COT report, institutional money has a pretty bullish positioning on gold. So that gives us positive scoring and contributes towards a higher score, which is more bullish. Or if something, if you're getting a lot of bearish catalysts here, it will contribute more to a more bearish score. So what does this mean? Where do I take the trade? Now, let me just add context here. If you are looking at this, this is not a signal to go outright sell something or buy something. Like the Edge Finder is not financial advice, right? If you're looking for a holy grail, give me the easy answers to the test kind of thing, this is not what the Edge Finder is. The Edge Finder just simply looks at a lot of data points and it generates a score or a bias. And then you can take that and use it how you like it. For me, what I like to do is I like to then go look at technical setups. I like to look for trends on the daily chart or the 4-hour chart, look for pullbacks, entries, and use my traditional kind of risk management and technical entries and exits concepts to actually execute ideas that I see from the Edge Finder. That's how I use it. So this is basically an idea board that what's so nice about it is every day it gets generated automatically by software and I just get to show up and read the report. And the simplicity of that makes my trading so much easier, so much more concise and systematic, right? Fundamentals, one of the big criticisms people have for fundamental analysis is that it's not very systematic, that it's very kind of subjective to a degree. So yeah, the concept that is cool about this is that this takes a little bit of the subjectivity out of it. Bob, if you have questions, we'll also drop really quick, just because I'm unable to answer all these questions on the live stream. I know people have questions. If you have questions, we'll drop the link to our direct message center where you can speak to someone on our staff who can answer the questions for you. So if you have questions, we'll drop the link now to send a message to our support team that can help you out with that. Nick, can you have a look at pound against the yen? Sure. Pound yen. Look at this. Hit that 38.2 that we marked up yesterday. But it's not getting a reading on the edge finder. So this for me is a good example of when the edge finder would keep me completely out of a trade. So I'm not, even though pound yen, actually, wait, let me make sure. I could be wrong about that. Pound yen. Oh, actually, pound yen is getting a bearish reading. Sorry. I just had that category unchecked. So pound yen is getting a bearish reading on the edge finder. So this might be an example, although I don't usually trade the pound against the Japanese yen, this would be an example where I could potentially look for a possible sell setup, manage my risk, put a stop above structure, etc. Does that make sense? That's how I'm using the edge finder. The edge finder gives me bias, and then I'm going and I'm looking for setups based on it. So euro yen is another candidate here. Let's look at euro yen. Euro yen kind of in that same region, 38.2% retracement. I mean, the thing is, if you're bullish on the yen, these pairs are finally kind of starting to pull back into some interesting areas. Dollar Swiss lower here this morning. Interesting. Look at dollar Swiss. This was a bearish reading. I'm not sure if you've been watching the streams, this was bearish, I think, a couple days back. And I was watching it for a setup, but I didn't quite enter. I shoulda, coulda, woulda sold it right in that area, but I was watching it. I didn't take the trade though. Bitcoin's up 2.2% today. S&P and NASDAQ, stock market opened 15 minutes ago, and we have a little bit more upside. I mean, if you're somebody watching the indices with me, so I am bullish on this thing, but I'm shocked by how many positive gaining days we have had in a row. I can't chat with your website. Just click this link. You should be able to chat. If you can't, you can go to a1trading.com and use our live chat support center there. It's in the bottom right. So anyways, let me finish my point here. Again, if you have any questions about the Edge Finder free week, we'll drop the link one more time to apply for that. And if you have questions, you can speak to a member of our team on the website, just because I want to keep the show moving. I know there's a lot of people who have questions, but I have a support staff that can help you with that. So today is, let's check this out. 1, 2, 3, 4, 5, 6, 7, 8. This is going to be, if we have a green day today, the 9th green day in a row for the S&P 500. Right? That's the 9th day where we closed higher than the previous day. That is remarkable if that happens today. And what's so crazy about that is you don't usually see charts move like that. Usually when you get big up moves, they follow by retracements, big up moves, retracements, big up moves. And same thing for bearish trends, right? Down moves, retracements, down moves, retracements, down. You rarely see this kind of upward move just do this. And for mean reversion traders or people who try and trade reversals or sell resistance, buy support, these sorts of moves like this green line, those are your worst nightmare. They're not fun, right? So if you're somebody who tries to short rallies or buy dips, most of the time it does make money. Most of the time, even in a downtrend, if you're buying this area and then trying to sell into the rips, you can make good money. It's not my preferred way of trading, but most of the time the market is moving, back and forth, and you can make a lot of money just selling high, buying low, until you get met with an environment like this, where inevitably this has been a very tricky few weeks for traders who have not been, buying the dip, or trend followers who have been looking to get long. It's inherently been a very tricky couple of weeks. I'm fortunate enough on this one to be on the right side of this move. I've bragged about it 700 times. So here's the 701th time. I'm long the S&P 500. I bought the dip. We got some decent positions moving on this one. I bought semiconductors pretty heavy, and I even bought some NVIDIA shares, which, gosh, this stock is ridiculous. It is a company that When I bought it, the forward PE, which is the forward price to earnings ratio, I think was like 35s, between 35 and 40 at the time. I don't even know what it's at now, but it's higher. The forward PE takes into account the projected earnings, which are a bit hard to predict, but they've been pretty consistently beating their expected earnings. So companies, they put out their own projected earnings, right? They project what they think they're going to make for the upcoming quarters. And Nvidia, as you can see with these little green E's on your chart here, has beaten almost every time for the last few years. They've beaten their own expected earnings. And the reason that that's worth mentioning is that the forward PE of Nvidia is high, but the market also knows that they keep beating their earnings, right? So they have earnings coming up in a couple days, and I own the stock now. I've been waiting for a long time. Some of the everyday stream viewers here might have remembered Chris and Frank and I's conversation about Nvidia when we were seeing this parabolic shoot to the upside. I mentioned, and Chris and I discussed this, the idea of finally seeing a pullback if it happens where we'd be interested in getting long. And I mentioned wanting to get access or getting a chance to buy it at $95 a share. Some of you might have remembered that, and it aged really well because during this parabolic run up, I had friends and family, people asking, were like, Nick, do I buy some Nvidia? It goes up every day. And I was like, heck, I know it goes up every day. I stare at it going up every day and I wish I owned the shares. But it's just amazing because when FOMO gets so violent like that and you start getting texts from friends and family, should I buy this stock or should I buy Bitcoin or whatever? You got to be so careful because look what happened. If you were the unfortunate soul that bought the highs on Nvidia stock, at one point you were down 35% on your investment, which, let's be honest, for newer investors or traders, that would have been, you probably would have stopped out and taken losses on that. You might have, or maybe not stopped out, but you might have sold or panic sold, etc. His videos look fine to me, no editor required. And then Chandler's like, excuse me. The videos, trust me, if you didn't have video editing behind what we do, you would suddenly say, actually, Nick, you know what? You guys need you need some help on your video editing. Anyways, yeah, so my point with Nvidia is I waited and I didn't get the $95 a share price that I discussed, but after the rip on that day, the violent reaction to this area, I felt strongly enough that I wanted to take an initial position on Nvidia. I would have liked to dollar cost average on Nvidia. When it comes to longer term stocks, that's how I like to approach it. I don't usually trade short term stocks. I'll trade ETFs all day long. I trade, the QQQ, the SPY. Heck, I even do some options trading. But when it comes to stocks, I typically like to dollar cost average. So I bought a couple of them, and some of them, I had full intentions of buying more of them had they dipped more. Like I bought CrowdStrike, which is a cybersecurity company, which is priced way, way expensive. So this is a speculative position for me because this is a very quote unquote, even with the big dip relative to their earnings, this company is very expensive. But it's a part of the market that I think has a huge future. I think cybersecurity, with all the AI stuff, with all every single year you get more cyber attacks, and data security is so important. These companies have a lot of potential, and the market knows that. That's why they're so expensive. But I think that they could be worth even more than what the market thinks they could be worth, if that makes sense. So I bought cybersecurity stock, CRWD, that's CrowdStrike. I also bought one of my all-time favorite stocks, which is Google. I've owned Google on and off many times over the years. Bought some Google, and I bought some Tesla. So Tesla, Google, CrowdStrike, all pretty much higher risk stocks that I had taken initial positions on with willingness to buy more of them had they dipped more. But Did not seem like the market wanted to do that. When this was happening, guys, I thought the stock market was going to, as soon as we saw that big gap open that day, when I first looked at it walking into work, I was like, well, we might be going shopping, guys. We might be getting some serious discounts on some stocks. And then it all ripped in that morning, and the price action was such a violent reaction. My thought process with the benefit of hindsight was, okay, we're gonna see some we're going to see some upside, and that's been correct. We'll see how long that can last as we come back to the highs or get closer to the highs. The question is, do we get some sort of double top reaction? We will see. I'm just going to trail a stop on this one and see where it goes. Anyways, guys, we've got James joining us on the show here in just a moment. So give me just a quick break. Remember, Edge Finder free week is now available. We'll drop the link here in the chat while we transition. Stick around. We'll be right back with James just after this. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show. All right, and we're back with Forex James. What's up, man? How you doing?
Hey, Nick, I'm good. Thank you. How are you?
I'm good. It's good to have you back on the show, talking some more markets. We've got a pretty big second half of the week. I was discussing this earlier, the Fed meeting on Thursday and Friday. We get the Fed's meeting minutes tomorrow. What are you watching going into the second half of this week as we get into potentially some higher volatility stuff? Are you looking at currencies, gold, indices? What are you watching?
Gold is quite interesting. So if we take a look at gold here.
Are you long gold?
No, I'm not in any positions, unfortunately.
I was going to say, I'd be really jealous.
Yeah, no, I was looking at the 2,500 level last week, which has now been hit. So now I'm just looking at the key levels now. So 2,600, 2,500, just waiting for somewhere to get in, really looking for possibly a retest of the previous resistance, because that would line up quite nicely with the 61.8 fib level from the previous low to high, along with the weaker dollar that we're seeing, and potential maybe a 50 basis point cut, but I don't really think so. I think gold has a lot of room to the upside, really.
Yeah, no, I agree with you. I think that the momentum here, I was going on a whole monologue earlier about how a lot of people, when they see gold move like this, I imagine you've seen similar comments, but I've seen a lot of comments of people just saying, when do I short gold? When do I sell it? This thing's overbought. What are your thoughts on that? When you see a market like this and it's breaking to all-time highs, do you get those kind of comments, and how do you react to them?
Well, I think it's justified, because obviously you don't want to go and buy, a rising knife, if you will. So I think it's more than justified to not be in the market. I think that's probably the best idea if you're not already in. But trying to short things like this, or shorting, Nvidia or the S&P, gold, it's a risky game. Generally those types of assets drift to the upside, so you're already having something against you in terms of an edge. So it's more a case of, rather than looking to short, just wait for those pullbacks that you're wanting to get short in, and sit on your hands and then get back in at the bottom of the pullback, if that makes sense. So you can see on my screen, I've got I'm looking for the fib level. I'm not trying to short it into the fib level, because I don't know where the top is. So I'm just waiting until we do get that pullback to get in long again.
Yeah, that makes sense. And I think that that's where it's a good way of saying it. Like, if you're not already in the move, consider being more like on the sidelines waiting. And that's, how I'm trading this too, is I've had so many comments of people saying, Nick, at what point is the sell ready? And I'm like, I don't see any sells like ready to go. Because as you pointed out, we could drift higher for another 3 days. And this is coming from somebody who I would like it to go down so I could buy it. I just don't think it's going to go down. I'm not betting that I'm not confident enough that it's going to pull back. A lot of times people say, oh, I'm just going to trade the pullback. Well, we don't know there's going to be a pullback. If we scroll out here a little bit, I mean, where's the pullback on these moves when we broke to all-time highs, right? There was no, if you're waiting on a pullback for those moves, you're still waiting.
Yeah, no, absolutely. I think there's a bit of a misconception. So I think it was probably a month or two ago, I was on these streams, and I was saying that, was it Credit Agricole or ING? One of the big institutions was shorting euro yen. And I was sat here on stream saying that it seems like a ridiculous trade. I don't know why they would take that, because all there was a weekly double top. But, we fast forward a little bit, and then the BOJ intervened and we had the risk off, and it actually worked out really well for them. And essentially what I took away from that was that, just because we trade a certain way where we can't necessarily try and trade against the trend, if you have a team of analysts, you've been doing this for years, you've got a mountain of capital to sort of dollar cost average, and you have a real reason to think or to forecast the market changing trends, then it's fine. But the average retail trader doesn't have the resources, the capital, or the understanding to try and do that.
That's a really good point too, James. I mean, that's something to think about for sure, is like the different strategies that can be employed by, groups or firms that have, you mentioned two important factors there. Number one, you have to have some serious balls to go against a trend like this. Let's call it what it is. Like you have to really know your stuff to know where, okay, I'm confident enough to start stepping in against this thing, full well knowing that gold has a tendency when it makes these moves to just rip through the highs. But as you mentioned, number one, they have a strong team of people that are making an educated decision, not just, your average, I hate to just kind of use the common, like, oh, retail traders this, retail traders that, but retail, typically their thought process on this is, oh, well, it's gone up too much, so I got to start shorting it. Like that is literally where the strategy starts and ends is, oh, it's gone up a lot, I got to short it. But as you pointed out, if you have a very thoughtful, fundamental, logical, sound reasoning behind why you might start to bet against a market, you can totally make a lot of money on the contrarian side. But you got to have a very good reason. And the second part that you mentioned is the capital or the risk management approach and patience to, wait it out. Another one that we can think about is the notorious George Soros short of the British pound. He was wrong for months before it ended up cashing in huge. So if you're a retail trader with a couple $1,000s in your account, you simply cannot trade in that way because, again, the drawdowns can be very immense. But if you have massive capital with small positioning and you're legging into a trade, dollar cost averaging, again, can be a wonderful approach if you have patience, capital, and very good reasons for doing so.
Yeah, exactly.
Yeah. Well, James, we've got our next guest coming on in like 10 minutes. So if you want to just kind of take over for a little bit here, walk through whatever you'd like to, give you the floor, and then Chris will be up after you if that's cool with you.
Yeah, no problem at all.
Okay, all right, thanks, sounds Nick. Good, man. You got the show.
See you later. So, guys, how's everyone doing? Let me have a quick look at the chat, see what I've missed. So, pound dollar pullback. We can take a look at pound dollar. Yeah, it's a bit difficult to gauge this one. I was saying last week that I was looking at the 135 level. So let's draw that up. Or was it 136? Roughly around there. So yeah, up here. So this is my long-term target. So by sort of the end of Q4, I would expect pound dollar to be at 1.35. However, in terms of a pullback, I think we do need to see a pullback at some point. It's just when are we going to see that? Let me fix this. There we go. So we are at quite a nice previous high here. This doesn't really mean much in the grand scheme of things, but if you are looking to try and gauge a pullback to try and get long, I think this would be a relatively simple place to start eyeing. So we could look from previous low to, it's not really a high yet, so it's a bit hard to say. But if this does get formed as a sort of double top, I'd be looking to get in at a 50% pullback of this move, and then target the 1.35 level. What you've also got to be cautious for is we've got this pretty strong level here. So this is around the 1.31 level, and this is a daily and weekly resistance. So, if you are trying to get long, just set an alert at this level, make sure you're not caught in, a strong pullback or anything like that. But if we do manage to break above this, I don't see any reason we couldn't continue to rally to 1.35, especially with Fed cuts coming. Oil, I've been looking at oil this morning. I really wanted to get in. So on oil, I was looking to go long. So, well, actually, let me rewind a bit further. So I took a short position on Trading Extreme. I think it was last week. I cashed out about here. So I think it was about 1%. I took reduced risk on this position. But the idea behind this was essentially to go long off the pullback, which was right here. So I didn't take this, luckily, because I would have been stopped out. But the idea for a higher oil in my book is still there. Now, the sort of fundamental reasoning and the thesis behind it, I still need to research. I still need to sort of back it up. I've not done enough in terms of the fundamentals and things, but technically doesn't look too bad. The only thing I have a little problem with is we've got this really nice level of support down here, and we haven't really reached there again. So I want to see price come down a little bit. So what I see here is just a very short pullback, continuation to the downside, reach support, and then continue to the upside. But again, that's just based on technicals. At this time, not enough data to put behind a long position yet. So I opened a Australian New Zealand long position this morning. So this is still at entry. I can give you the breakdown for this now. Just give me 1 second. Here we go. So you can see this is what I do when I place a trade. So when I place a trade, I force myself to have a reason behind it. It's not just because there's a support and there's a bullish candle. So you can see the Australian dollar AUD is expected to outperform the New Zealand dollar NZD due to the divergence in central bank policies. The RBA's hawkish stance contrasts with the RBNZ's dovish approach. With the latter expected to cut rates further in response to weak economic conditions, this long position on AUD/NZD is supported by strong labour markets in Australia and the expectation of continued AUD strength relative to the New Zealand dollar. Now we can see here the seasonality is also bullish for this period. Now I know you can't see much from the screenshot, but just from sort of when is this 20th of August to I'd say the 4th of September, we can expect, based on the past 24 years of data, we could see a bullish market in this period. And then based on technicals, we have a really nice supporting trend line. Now, I'm not really a trend line trader. I don't really like them that much, but it's very obvious in this situation, so I'll happily use it. 50% pullback or a 0.618 pullback, and then just targeting the previous highs up here for roughly a sort of 4% gain with reduced risk. You guys like to talk about my hedge fund friend. I've not spoken to him in a while, actually. He was very upset that he missed a couple of trades, so he's gone into hiding. No, I'm joking, but yeah, he's kind of sitting on the side at the moment. He's not said much in terms of the markets. David, that's my view on the Australian dollar against New Zealand dollar. Euro Australian, I'm also looking to go short on that one as well. So you can see here, I've got this one marked up. Now, head and shoulders, again, I actually don't really like to use head and shoulders, but in this situation, it was just too obvious to not mark up. So I'm waiting for a break of the support or the neckline or whatever you want to call this. And if we can get a really nice bearish H4 candle close below, I'll happily take a short position into the, actually, I'm not sure. Yeah, so this needs to be moved up a little bit. Happily take a short position into sort of the previous lows around the 1.58 area. So that would be around there. Now, again, this would go with the fact of the stronger Australian dollar. Now, the Australian dollar has been performing really well recently. So again, I need to do a little bit more research on the euro just to solidify this idea. But so far, I quite like the idea for a lower pricing on the euro Australian. What's happening on US oil? Why did it gap? Did oil gap? I don't see a gap on oil. Oftentimes, when you see a gap in the markets, you should check other brokers because it can just be either an individual broker problem or it can be an actual market gap. So before paying too much attention to them, always just check other markets because I don't see a market gap on mine. Dollar yen. So I'm still in dollar yen long. Not looking too great at the moment. So I've got my initial positions are up here. So I'm still in these long positions from 158 and 156. I decided to scale in at 143. So I'm looking to basically get out as soon as possible. So 152 is my average. So I can get out at break even if we can reach 152. Now, I'm also interested in 155 because I have heard from bank reports that 155 is sort of the revised target. Not in any specific timeline, not sure when, but 155 could get hit eventually. So I'm just looking to hold this one. I'm quite happy to hold. I've already sat through enough drawdown. I can handle a bit more. Pound New Zealand, short Pound New Zealand, and I'm also short the Euro NOK as well. Australian dollar. I think Nick said I've got about 10 minutes. So A1 guys, please feel free to jump in and kick me out of. Yeah, I'm not sure what time that actually was. So Australian dollar against the US dollar, you can see I'm getting ready to go in long. So I've got the ING target for the end. Well, I guess this will be sort of mid-September. So this would be really nice to catch. The problem is trying to get in. This is just a bit of a steam train to the upside. So we've had the H4 moving averages cross bullish. So I'm looking to get some sort of pullback to trade it into around the 168 level. Now, whether we can get that pullback is a different story. Unfortunately, I can't tell if we will or not. However, the RSI is overbought. And on the daily it's overbought. So that's a little sign that we could be due for a little pullback. However, yeah, we'll have to see. But yeah, again, just going back to the really strong Australian dollar that we're seeing. We spoke about gold, dollar CAD. I would like to go short on dollar CAD. So I'm quite bearish on the US dollar at the moment. We can see the US dollar is just falling off a cliff here. We've broken through this supporting trend line. This did not happen, which is a bit sad. And then if we look at the Australian dollar, just rocketing up to the upside, the same with the pound, and the yen is heading to the upside as well, slightly. So yeah, the US dollar is getting outperformed quite severely by the other G10 currencies. So I'd quite like to go in for a short on a retest of this previous support. So just waiting for that, really. CAD Swiss. I don't think I'm looking at it. CAD Swiss. Here we go. Actually, it looks like it might be quite nice to the downside. Let's see. I quite like this, actually. We've got a 50% pullback of this move. Just rejected here, along with the 21 daily moving average. And the H4 is bearish, still holding below the 200 moving average. So a short position from here. Oops, that's the wrong way. A short position from here wouldn't look too bad for me. I would like to see just a break below this level of support. So clean, bearish, engulfing candle below there. Stop would be above the previous high and a target at the low. So unfortunately, the risk reward would be quite unfavorable. Really, it'd be a 1 to 1.7, which isn't great. However, if we look at this market, really nice move to the downside. It's just drifting off, down and down. So, if we're just following the trend, I think this looks quite sensible to expect, really. And then if we wanted to go for a higher R&R, we'd have to go down to the fib extension at negative 0.618. That would give us room to extend our stop a little bit to maybe a 1 to 3 or 1 to 4. NAS 100 to test highs. Yeah, I've seen a lot of doomsday guys on Twitter talking about NASDAQ going, or actually the indices markets, mainly the S&P, going down to like the 4,000 area, which I don't really think is going to happen. But yeah, I think NASDAQ has, I think it'd be more than justified to say we could go back up to 20,600. What's stopping it really? As far as I can see, there's not much. We do have Nvidia earnings. In fact, has Nvidia earnings already come out? I'm not sure. I don't trade stocks. I'm not sure if they've already come out or not. But yeah, I think what's to stop NASDAQ? That's the way I see it. I mean, we might see a pullback. The RSI on the daily is overbought, but we're still hanging above all of the moving averages. The trend is to the upside. We've recovered really, really nicely so far from this move to the downside. So we've corrected. Let me pull this up. We've corrected the majority of this downside move. So, why wouldn't we go and correct this as well? That's the way I see it. But yeah, we'll see. Okay. So yeah, not really too much going on right now. Silver's moving to the upside. Gold is as well. I'd really like to catch a pullback on gold. Just moved my alert. Yeah, I'd love to catch a pullback on gold. It's just trying to get into gold has been quite difficult, really. The only really good place on gold we've seen was sort of down here at the support level. But yeah, quite nice. I think we will have a pullback on gold. I'll try and get in on this previous resistance. Oh, it's the 28th. Okay, so we've not had Nvidia earnings yet. So yeah, that will be interesting for NASDAQ. But from what I've seen, the sentiment's really good for Nvidia. I don't think anyone's really expecting Nvidia to underperform in earnings. So yeah, I think that'll be quite interesting. DAX. Yeah, so DAX actually has recovered fully from the risk off. So from here, will be quite interesting really to see what happens. So we've obviously tapped into this previous high, and now we are starting to see some downwards movements. But again, this is, I think, just due to a slightly overbought market or overextended. So I wouldn't be really upset trying to find a pullback. Now, I don't think we're going to get a 50% pullback here. We did just correct the majority of this move. So to retrace it 50% again, I think would be a little aggressive. But yeah, I think it's something to keep an eye on. But in terms of entries right now, I don't really think there is one. Yeah, not really something I'd be too interested in taking. The Nikki's done really well as well, actually. So we've almost recovered about 50% of this risk off move, which is interesting. Yeah, interesting to see. Okay. JPY, I am a bull on I'm a bear on JPY. So again, I'm just going to pull this up for you. Give me 1 second. Here. So this is my research document. I put this together every couple of days when there's something new and interesting. Where is the yen? Here we go. So we can see USD JPY is expected to fluctuate between 145 and 155, with potential stabilization around 147 by the end of 2025 as the Fed cuts rates. So this was published today by Bank of America. We've got Credit Agricole here. The JPY experienced fresh selling interest but remains overbought, with potential volatility ahead due to Fed policy signals. We have Goldman Sachs today. The JPY could weaken if the Fed signals sustained easing, with markets focused on Jackson Hole for future direction. But we've got Morgan Stanley here. JPY weakened due to strong US economic data and expectations of continued monetary tightening, with potential BOJ rate hikes impacting carry trades. This is MUFG. yen dynamics, JPY faced renewed selling pressure with potential for increased hedging of yen positions and continued volatility. Japanese investors have shifted focus towards equity markets. And last one here, we've got ANZ. The worst of the yen carry trade unwind seems to be over, with focus now shifting back to Fed policy moves, which will influence the JPY. So there you go. That's the rundown on the yen. Hey, James, August has been pretty trash for me. Wondering if you subscribe to the idea that this month have terrible PA for currencies. Yes, so there's a saying called sell in May and go away, because summer trading is awful. Generally speaking, summer is a very quiet period. It's when children are off school, people go on holidays. There's less market movers around. So, if you go to somewhere like somewhere trading large amounts of FX, like any sort of institution, they'll have more people off during the summertime than they will sort of, February to March. So yeah, it's expected. If you've been in the markets a while, you'll know to be very cautious during August and sort of July, because it can be a bit rocky. Let's just see. Euro pound. I've switched my bias from short to long on euro pound. So I was looking to get into short positions, but now I'm reconsidering. I saw some new data. I'm willing to shift my bias to the short side, to the long side. Just give me one sec, guys. So yeah, switch bias to long. So let me, I don't know if I listed it here. Yeah, here we go, euro pound. So the euro is expected to strengthen as Fed's easing cycle progresses, while the British pound faces challenges from Bank of England's cautious stance and potential economic headwinds in the UK. With the euro likely to benefit from improved global risk sentiment and the pound facing downside risks, the short position on this is inverted. So the long position on the euro pound aligns with the broader market expectations for the euro strength and pound weakness. So yeah, that's about it, guys, from me. So feel free to take that information away, and I shall see you all very soon. Thank you for having me. You've been a great chat as always, and thanks to the A1 guys, of course. So yeah, enjoy your days. I'll see you very soon.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hey everybody, happy Tuesday. Welcome back. It is 10:23. We're live August 20th. James just finished up a session. I'm going to run with the show for a little bit. So I do have a couple of trades that I wanted to discuss. If you were with us yesterday, let me grab this guy right here. So this is a trade that I took on Monday morning. I got filled on this right before I joined the session. I centered price around 55.60, and we were trading up in this level today. So real price is 56.03 live right now. We got up to the highs around 56.10. And I did already go ahead and take some profit. So I was in this trade for a 17.50 debit, and was trading this morning for as high as $19.40. I got filled for $19.25. So took the profit, walked away with about $1.75 per contract, which is pretty decent. It's about an 11% return on capital for a trade that took me, less than a day. So I put the trade on yesterday, closed it out today. I only required about a 50 to 60 point move one way or the other. That's why I really like this trade. It gives me a decent chance to also ramp up profits. If I want to wait later in the week, I mean, if I want to sit here and deal with the volatility of FOMC minutes and PMI numbers on Thursday and Jackson Hole on Thursday and Friday, Sure, I mean, the real price might get up here, the real price might drop and get down here. I have no idea. But for me, I think that the common thread with this type of trade is I'm pretty confident we're going to get at least a 50 to 75 point move in the SPX every single week. The average is around 140 to 150 points. So one way or the other, we're going to see some movement. So I went ahead and took some profit on that this morning. So that's good. Also watching in the short term, I do have a trade running on the Qs right now. I put in a long put at 477, and that was up here when price opened near the highs. So it's showing a little bit of profit, but I'm going to let this gamma level just kind of play out for today, tomorrow. Perhaps today's price action is going to push a little bit lower. If that's the case, that would be ideal because my trade for about a $2 debit, I can calculate approximately what my profit will be if I go into my trade here. I'm almost also at a strangle profit. I need this to get to 265 or lower. So I'll be watching this strangle at the center price at 56.05. So if I go into the Qs, right here, the Qs 477 long put up about $35. And let me look at this position. So 477 is currently a 36 delta, and we'd have to move from 480.3, let's just say 35, 480.35 minus 477 is a $3.35 move at a 36 delta. So I would add roughly $1.20 to my debit, which is 212. So conservatively, I should be able to see about a $3.32 credit, which gives me, $120, $130 per contract. And that's if we get to this strike, let's say today. If the IV, which has gone up a little bit from like 15 on the SPY, let's see if the SPY is up a little bit today. But IV is pushing up a little bit higher. If the NASDAQ drops and hits that gamma squeeze level at 477, that would be good. Turn this into a nice little profit. And then what's interesting is on the other side of the coin. So I'm long put at 477 on the Qs, and on the other side here, I mean, the SPY and the Qs are going the same direction, okay? But what I think is interesting is this level up here at 565, which is pretty much retesting the all-time high in the SPY. So I'm also long to that level. This one only cost me about 90 cents. So I did 2 contracts on this one. The one that cost me $2, I did 1 contract there. And I mean, I think at some point this week, like the idea is define risk on one, profit potential on the other, and hopefully the net result is going to be a gain. So we'll be watching that. Those are expirations out to Friday the 23rd. Define risk. I mean, the most I can lose is what I paid for the option, so that's okay. Cedric says, I'm 2 years going into trading. Every time I hear Chris talk about his positions, I still feel like a newbie. Well, Cedric, I'll tell you this, man. I was a newbie, 20 years ago. It's just, I'll say this, if you come in and tune into the sessions every single day, and I can say this from testimonials of years and years of working with traders and running trading rooms, I talk trading, and so some of it is you learn a little bit faster from the fire hose that I'm spewing, but I'm never, ever, ever trying to talk above or over anybody. I even look, I even hate the strategy names for options trading. Instead of calling the Greeks, delta and delta, gamma, theta, vega. I mean, really, you just have to know: is it price? Is it time? Is it volatility? Right? So there's ways to simplify, but that's what options does. Options, makes you sound a lot smarter than probably what everybody like. I mean, it's just a silly language, you know. But once you get over that and understand what the actual like pros and cons and the actual consequences are of trading options, good and bad, it's just the silly little vocabulary you got to pick up. So I'm happy to keep it very simple on all my trading. Everything I do, I've thrown more crap away than what I have now. The rabbit hole of going down and trying to find the perfect strategy and the holy grail. Look, I'll give you the holy grail right now. You guys, y'all ready? Okay, it's not that hard. Okay, this to me is the holy grail. If this is your trading, right here. Okay. So everyone fits in this as a trader. You have a reward to risk down here, and it's either high or low. Okay. And you have your win percentage over here, and it's either high or low. You can see where I'm going with this. There are thousands of strategies that can fit in this quadrant, but there's only 3 of these 4 spots you can make money. All right. So I don't care what strategy you use, but if you have this strategy where, well, let's say this, swing traders, okay? Swing traders, trend traders are typically in this area where they have a tendency to have, let's say lower win percentages, right? So lower win percentage, but a higher reward to risk. Every time I take a trade and I'm a swing trader, I'm going after 2 to 1. I'm going after 3 to 1. Perfect. That trader with that type of strategy, with that type of methodology, with that type of reward to risk ratio, with that equity management can make money, right? If you have 2 to 1 reward to risk trades, you have to win about 34% of your trades to be break even or better. So if you can squeeze out, 40% win rates, 45% win rates over the course of thousands and thousands of trades, you can make a lot of money trading. So higher reward to risk, low win percentage, it's okay. You can still make money, right? If you have a super high win percentage and a low reward to risk, you can still make money. Case in point, I'll speak from my personal experience in trading currencies. I trade a lot of Forex pairs that, I deployed strategies and robots that didn't necessarily have a favorable reward to risk, but they did have a super, super high win percentage, like 80%, 82%, 83% win percentages. Now, what they also did is they would sit and they would manage drawdowns, right? So I might let a position that's not a favorable reward to risk. Maybe it draws down 1, 2, 3%, but then it still closes out for, 0.5 or 1% gain. But I'm willing to take maybe a 2x drawdown, a 3x drawdown for my position that takes profit, but I close out profit a high percentage of the time. Those strategies can also make a lot of money. The only thing that makes me nervous about strategies like that is how aggressive your trade size gets, how large your drawdown gets. That has to be under control. If your drawdown is ever too large and you're on the cusp of one entry away or one flash crash away from blowing up your account, you're trading too big, you're over leveraging. But these strategies can make money. Does anybody have strategies like this? Okay. A lot of times for me, this is, I traded to a lot of pivots. One of my kind of lightning in a bottle, a couple of years of trading was, would have been like 2012, 2013, 2014. I traded basically everything except for the yen, because the yen was a carry trade from 2012 to 2013 and change. We had, crazy week yen at that point. But I traded a lot of commodity based pairs. So like Aussie CAD, New Zealand CAD, Aussie, New Zealand. And I traded to a lot of pivots, and pivots were ridiculously good. They were hit so many times on daily levels, weekly levels, monthly levels. If a pivot was missed, I was confidently trading back to them. And that was one of my best years ever in trading, where, I was up like, I don't know, it was one of my biggest years, like a 400, 500, 600% gain for my account. I mean, I was trading, it was like smaller personal account at the time, but just thought I could do no wrong. It was a great couple of years, but then I realized like I got a little cocky and a little confident, and I ended up nursing like a 20% drawdown. And that humbled me very quickly, where I fought my way through it, got myself back into a small gain. But that was exactly the strategy. I was willing to take a terrible reward to risk for a high win percentage because I maintained some group trades. So, and then Frank's coming in here. Let me finish one more thought here, Frank. So reward to risk, this is kind of, if I'm saying, if we got a holy grail of trading, it's probably right in here where you can blend the two. If you can find a way to have a favorable reward to risk and also have a decent win percentage, that's where your trades are going to do the best. Obviously, not every strategy falls within that quadrant, but if you think about it, you take a trade that offers you, 1.5 to 1 or 2 to 1, and you can maintain a 50+% win rate, you're going to be a very, very profitable trader. So by numbers, it's not that difficult. And then lastly, this piece here is the only spot you can't make money. you can't have a low reward to risk ratio. You can't have a low win percentage and expect to make money. It just doesn't make sense mathematically. So if you think about that as far as your trading, your strategy, that's how you figure it out, right? So if your strategies are not falling somewhere in these 3 spots that make money, you got to rework those strategies or look at something else. Okay. All right. Frank, what's up, dude? How are you, man?
Pretty good. How are you?
I am good.
Today, I'm watching the dollar yen.
Dollar yen.
Okay. Well, I told you earlier, but I think to me this is the main fear gauge. I think watching this carry trade unravel further could be bad for the stock market, and I think that's why gold is a really good hedge for this.
Yes.
I've been trying to get in gold. I wish I didn't get out of it, but I try to get back in. It keeps hitting new highs. So I'm just kind of waiting, but I'm also watching this currency pair, because if it continues lower and say it tests the lows around like the 141s range, that's kind of back to where we were that other week. Was it like July 31st or August 1st when we started really falling? So I'm wondering if this aggressive rebound in the stock market is just another setup. We did break above that 50-day moving average. It was a double bottom and a previous top. And we broke above that. We're in the middle of that between the 50-day and 20,100s on the NAS. So we're kind of just hovering in between support and resistance right now. The close above was a good confirmation, or helped confirm that maybe we are going to test the highs again. But seeing dollar yen continue to slip is something that's mildly concerning. There's no news today, so I'm not really sure if we're going to get much of a move. But come Thursday, Friday, we're going to have PMI numbers. We're highly sensitive to unemployment claims. That comes in lower. I'd imagine it would be a volatile day because we've seen some heavy moves on jobless claim beats. So I still think now that we've broken above, we're gonna try to retest the highs. Today just may be a slight pullback, but I don't know. I'm still kind of bullish now that we've done this on a technical level.
So you're kind of bullish on indexes still, trying to get to all-time highs. I mean, 565 is the SPY high. How about the NASDAQ? NASDAQ clearly has more room to gain as far as getting back to the highs. We'd have to have another, 5% rally to the upside. Where yesterday I posted a video. We were within about 1% of the all-time highs in the S&P. So, I mean, Russell is fading a little bit today. Dow is hanging in there. The Dow is only a couple percent off the all-time highs as well, about 1.3%. So the Dow's hanging in there for some stability. The SPY is closest to the all-time highs, but a little bit red today. So you think today is more of a pause day, or a nasty pullback day?
We're already at 10:30, and the market has kind of made its decision. We'll hit 11, 12, 1, probably see some more pausing, and then usually by the end of the day, the move that was initiated in the morning will probably continue. So if we close this way, if we close with this sort of inverted hammer, I would be more concerned about further pullback. However, we haven't tested that 50-day yet. So it's hard to tell if we're just taking a breather and we're going to bounce back, or if we're, turning lower. But there's just a lot going on. Geopolitical tensions, they don't seem to be affecting it that much. We have, I guess, meeting minutes, which is just a reiteration of the last FOMC. Right. So I don't think that's really going to change anything. PMI, I don't know if the market really cares about PMI. They care about labor and inflation, in my opinion. So I feel like it can show any kind of number, and PMI is just mostly has no trend in where it's going. Yeah. So
unless it's below 50. If it's, we're forecasting on services PMI to be at 54. Manufacturing PMI 49.7. If we look at the graph here, I know that 50 is always kind of that line in the sand. So if we're below 50, like that's slowdown potential. services PMI, which has been the steadier of the two, above 50, same type of thing. If this one is, back, I mean, we're probably going to be safe on the services side, but manufacturing has slowed down quite a bit. Yeah, I mean, I don't think that's going to be a huge derailer. Honestly, I think it's a backloaded week with all the news. We have Jackson Hole, which starts. I know that it's tough to necessarily say that you're going to trade Jackson Hole because you never know what's going to come out of it. But there can be some comments coming from Thursday, Friday. I want to say that maybe the new FX czar for the Bank of Japan is talking to Jackson Hole, I think. But I know Powell speaks on Friday at 10 a.m. So we will see. I mean, it could be this is part of the reason I closed out on my little 8-legged trade, is because I don't want to have to be waiting for Thursday, Friday price action for me to be winning or losing trades. If I've got early trades where the news might be backloaded this week, but I'm front running, or not front running, I think that's an illegal term. I'm front loading my week when it comes to profits and managing profits early, then I'm just going to do that and not really worry about the potential volatility by the end of the week. So, it's going to be, I mean, we're still in that last little bit of summer, right? Where we have, after this week, I mean, the next big announcement and going to the end of the month, we have PCE on Friday, the 30th. We have earnings from NVIDIA on the 28th. We have GDP number unemployment claims on the 29th. So, I mean, again, we're kind of getting into a lighter calendar, but there's some news that the market might be paying attention to, sensitive to. Look, man, as we came within 1% of these highs, the market can do whatever it wants, but it's certainly a lot easier to think that this market's going to be trying to test those highs again, as opposed to nope, good try, now it's going to fail. I mean, at this stage, I would guess that the market's likely going to retest these highs before it tests these lows. I mean, at the halfway point, I was asking this question because who knew? I thought if we had any type of structure here, the market would be yeah, we'll be maybe retesting lows. But when these bulls, I have been very surprised to see that in 14 trading days here and 10 to 11 trading days here, the bulls have actually come back with a vigor that I have not seen since it almost feels like a COVID V bottom type rally. I mean, it was nuts, man, how fast these bulls have pushed the market up. And just look, this chart here, I know it doesn't look like much on the 5-minute time frame, but this is squeezing in 2 plus weeks of trading. And the only thing we had in this whole area here, Frank, was one pullback day. Other than that, it was obviously a nasty spill for those 3 days. But once we hit that bottom on the 5th, it was up. It was up. There's your pullback day. It was up. It was up. It was up. It was up. It was gaps. It was up. It was up. I could not have asked for easier trading in here. I saw some traders post to my my Discord and my trading rooms yesterday, sharing some of their MNQs and MESs, their micro futures trades. And I am very impressed with how active some of these prop trading futures traders are. I mean, they'll take 20 trades in a day, man. It's nuts. I mean, I go back to, I mean, I used to scalp Forex on 1-minute time frames, but I was never that active. But to each their own. So I think there's opportunity everywhere, but it's just crazy. Yesterday was a pretty silky smooth day. Let me bring up one more chart here, and then if you don't mind, with are we good until 11 and change, or do we have Nick Phillips coming on at 11?
I believe Nick is coming on at 11.
Okay.
So okay. 15.
All right, let me go to this workspace here. And right now on my ES feed, we're still above the daily and weekly, or we're above the weekly VWAP. We're back below the daily for right now. I'm watching the SPY on my other chart here. My gamma level at 555 is starting to fill up. I did have that. I should have kept that stupid trade down from yesterday. I hate to put the SPY on for both directions, but I might have to. Let me see. I don't want to chase this thing. I'm just going to leave it alone. I'll take the Qs. If we're going to the downside, I'll take the Q side. And that's going after 477 or lower today. Hopefully that'll work out to be a nice little win. I want to address a couple things with earnings today. I know. So yen pairs, let me ask you this. So you had mentioned dollar yen. Really quickly on my end, dude, I don't really see, the yen is, I mean, the dollar is weak. Yes. But the yen as a whole is not necessarily super, super strong. Not yet, right? The yen is.
I don't necessarily disagree with you. I'm just noticing that on COT, it started out with a lot of short coverings on the yen, and now this week they're buying heavily. They're also getting rid of shorts. They're doing more covering and then more buying on the yen versus the past couple of weeks where they weren't really buying it. They were just getting out. Now it's looking like a shift here. So I'm not saying that the dollar's weaker, but I'm saying there's more activity going on in the yen. We saw an 11% change to the long side.
Correct.
Meanwhile, the dollar is only like 1%, which is kind of like what it's been doing every week.
Yep. No, that's crazy. Also, looking at the Nikkei, that's showing a net position. That's a net change to the downside as well, right? Looks like there's some smart money coming in to either fade the Nikkei and get long the yen. That's what I'm looking at. I'm looking at the same thing you are on Edgefinder Pro, right? COT filing.
Yeah.
Yeah. So yeah, JPY is definitely leading the way with a big percentage swing. So yeah, interesting.
Heavily selling Nikkei, heavily buying yen.
Yep, that makes sense. Yeah, I mean, let's go to the 4-hour time frame here for a moment. I mean, this could be a pretty simple trade where, I mean, look, if we break, let's say this low right here, I still don't feel comfortable be like long-term positioning for the yen, because look, this swing could be low to high, pull back, and then one more push up. This could actually end up forming this large harmonic pattern right around this like 50618 zone on this fib retracement, and then we have a bigger short coming later. But I could see, smart money starting to get positioned here, and then smart money would be bullied out of this thing if we get back above maybe 105, 106. But I think smart money would hold this backside of the trend line, look to see if the structure breaks down, if we have any risk off trading through September. That's where, as we get out of August, going into September, it's historically it's not good for the stock market. We got a Fed rate cut coming in September. The one thing that maybe the market's hoping for this week is that Jackson Hole will actually reveal how firm the Fed is going to be about cutting rates, and also how firm the Fed is going to be about staying on that path. Because historically, when the Fed starts cutting, they stay that way. And so this is one Fed regime where if they want to make sure that inflation is more permanently extinguished, I don't think they can just say, once we start cutting September, we're going to cut every month or every FOMC for the next, 10 meetings. I don't think this Fed could do that, because if we start to see, as we've been noticing here, like sticky inflation, 3% year over year, 2.9 year over year, if we're nowhere close to that 2%, I don't know how the Fed can justify slashing rates over a 16-month window to 3%, 3.25% when our inflation is still the same level.
Yeah, I mean, so we're thinking the same thing. We've talked about that a lot.
Yeah.
But I feel like it's like you said, it's not about what you want.
I agree.
They might just be doing it. Who knows if it's political, or who knows if it's just to give some relief to the consumer.
I think it's that, dude. I think it's more economic relief. I think it's that we've been restricted for longer. I think that servicing our debt at 5.5% is crushing our interest payments. Yeah, there's a lot of factors that go into it, but historically, when the Fed does start a cut cycle, it's usually in the wake of a slowing economy, which we are also seeing. Like we are like right on the cusp, man. I mean, there's good stability, and I think the argument is that the U.S. economy is more resilient than others, but doesn't mean that we're properly priced at these valuations, and it doesn't mean that we're properly priced at these all-time highs. So I do think there is some, I don't know, there's some opportunity for higher highs to just put on blinders and just buy the dip always. And there's some opportunity for the market to have another vol event, because we have had a record-breaking vol crush that the market's never seen before, and that just happened in the last couple of weeks. So it's not nothing, man. Like, all this is how I will remember 2024. Was a really easy year, a crazy vol event, and then whatever happens now is just a huge question mark. Like we're obviously 1% from the highs on the S&P, so I'm a little bit more bullish, but I'm like very cautiously bullish, as if we stretch to these highs, how much more volatility do we deal with? I know you and I talked about this, but yeah, go ahead.
I did a really cheap options play on SPX.
Okay.
Where if
you throwing in some butterflies like you told me yesterday?
Yeah.
You did? Okay. Let me see.
If we hit, I think it's 56.60. Let me make sure that. Okay, 56, 55, 65, and 70.
50. Oops. Let me do the track.
Let me make
Okay. So
sure.
what's your pin? What's your pin price? What's the sell price?
The sell price, like the credit.
No. What's the one that you sold? Because you have a 121 for the broken wing butterfly.
56.65.
Okay, so 56.65 is your -2, right, for your butterfly.
Yes.
Okay, and then your +1 is 56.60,
Um,
and then 56.75.
50 or 56.55 is one of the buys.
56.55.
56.70 is another one of the buys.
Oh, okay. So you are going. Let's see, 56. Let's price this one out. So you did, and these are all on these are puts, right?
Right.
Yeah. Okay, you did it. So you're doing like this is what you and I talked about on Discord offline yesterday. You're doing this like I'm doing those in the money credit spreads, but you're doing it with a broken wing butterfly. I think that's really good, man. I want to look more into this for sure. So SPX, by the way,
I mean, I honestly don't know if it's good
profit.
or not. I'm
I'm going to look at it with you. So I mean, I don't think it's bad.
I did it
A little
because it
triangle
was
trade today.
so the credit is 4, like it was -410. And if we go up to 56.65, that'll be max profit. If we break the highs, I'll collect the 4 something premium. So it if not, I'll lose. I think it's like 90 cents.
Okay,
But
what is this expiration, by the way, Frank? Is this isn't today, is it?
no, it's Friday.
Friday. Okay, so you in the put 56.65. So we'll do a put butterfly. And we're going in the money here. So 56.65 is your sell. And then you have the 56.60 and the 75. Is that correct? Nope,
No.
56.65. So you went 10 and 5.
55, 65, 70.
70 and 55. Yeah, that's okay. That's right. That's broken wing 360 credit. Dude, that's pretty great. On the SPX, I mean, the nice thing here is there's not really a risk of assignment. That is like going into a broken wing butterfly. You got your profit trap. Probability of profit is low, right? You're getting 25% there for that POP. But buying power is nothing. Max loss is very defined. Max profit's awesome with the trap. And I mean, usually the broken wing, what I like about this is you're in the money. So getting 365 here and only risking $1.35 is really, really solid. So
I got
if you
410.
had 410, so you took the trade at
yesterday.
410, and so your risk is like $90. Is that right?
Yep.
Yeah, that's really good, man. So I like the trade a lot. I want to actually like use this style and test it because if we're looking at so let's say we start the week off. If we were to test this around like I'm just thinking week to week. What you're at here is did you pick 56.65 based on a technical level, or did you pick it based on like a delta on the expected move?
It was technical. I looked at the
Technical.
chart and saw that was the top.
That's the high. Yeah, that's like the high, right?
Mhm.
Yeah. Okay. Okay. So let's talk pros and cons really quickly. Pros. You collected 410 and your risk is 90 cents. It's an awesome reward to risk ratio. You have a profit trap on top of that, which is a nice little booster. So on top of the potential, $4 and change of credit, and that would be if price goes through these levels. So just so everyone knows, if Frank's trade, if we're at 5600 and by the end of the week we're at 5671 or better, he's going to keep that full 410 credit and keep all of it. If he's in between here, we'll have to see what the actual credit is trading for, but we have a potential profit trap of another like 2 to 1 on what he collected. So he could max out around $850, which again is fantastic if price is in the middle. The only drawback with that is not going to be achieved until you're at the day of expiration near closing bell. So that's the only downside is you don't have the runway of getting this trade for profit early. You really need to see that if you take the trade, price just goes beyond your level. and get you profit. So I like the reward to risk. I think it's a great setup in that regard. I would look at this mechanically from the delta side. If you started out for, let's say this is a trade you like for the week, man. If you like this trade for the week, if I went to like a 30 delta, okay, so I need to draw a triangle. So a 30 delta on the upside. So if I did a, I'm trying to think what this would be for the put side. You'd be trading like probably a, I guess it'd be maybe a 70 delta in the money put, because what we have to look for is like, what is that like one standard deviation move? That's about 68%, right? So if we get beyond that, if we go beyond a standard deviation to the upside, then anything at like a 70 delta, so I need 70 delta, not 30. Anything at the 70 delta is the in the money side on the puts that would get you paid. So if I know that Tacey's rolling out like a phase 2 of their look back program. This is something I would like to test and go in and do like a mechanical, let's say every week. Okay, every week or every like 30 days, you do a 70 delta broken wing butterfly and just go after your credit. Try to collect, maybe 70% of the credit. If it's a $5 spread, you try to collect 70% of that or better. In your case, you're getting like 80% of it. But I'm just interested how the thing like closes on its own without having to micromanage it, without having to manage it early. How does it close on its own? Because all you need here, Frank, is you need about 30% of these to be winners, and you'll make a lot of money, right?
Yeah.
POP is 25, but if you end up walking away with 35% profit, and all that means is I have statistics here that the call side, how Tasty typically does like their 16 delta strangles, that's like their bread and butter. Their 16 delta strangles get tested like 32 to 35% of the time, which means that the market is it's on average going to test the call side more often than the put side.
Okay.
And so if you're in the money with those puts, that's a benefit to your trade. That's my point. Because
Sure.
if you think about this, if price is right here and you have a call and you have a put and it's a strangle, if the call side gets tested, well, what you're doing is you're flipping that and saying, well, I'm just going to do a broke wing butterfly on the put side, and that actually gets paid out.
Well,
That's
what's really great is that
that?
you take this on the call side. So if you're selling these broken wing butterflies,
Yep.
you don't have to go as far out as I did to collect that same amount of reward to risk. So you can be a little bit, you can be closer to price than I had to be further from price.
Okay, so if we did a
calls are more expensive, I guess.
Okay, so let's do. So you're doing an in the money butterfly calls, like a broken wing butterfly call spread. I'm just gonna go. Here's what I'm gonna do. I'm gonna go out to the 22nd so I can get rid of the trades I have on the 23rd for right now. Let's go down to this expected move, which is right around that like I said, 70, 75 delta. So let's move this up here, and let's pin this thing around the 75 delta. Okay, we'll pin it around 75. And we will go this way and this way. That's showing a debit right now. That's weird. I did this backwards? There we go. Okay, there's my call side. Okay, so I just had this showing $4 a second ago. These spreads are pretty wide, but I don't know. I'm probably about, I guess when you first took the trade, you took this trade today or yesterday?
Yesterday.
Yesterday. Will you do me a favor when you look at this trade again? Will you look to see? Well, I know you did it based on the technicals at 56.65, but will you look to see what your delta is when you take that trade? Because right now the delta is probably deeper, like it's probably a 80 or 90 delta right now. But when you took the trade, I was wondering if it was right around that 70. Because if that's the case, like I said, I think we can build out a little mechanical testing on doing like a 70 delta, because that's in the money enough. You could hopefully collect about 70% of the premium, 75% of the premium. But yeah, I do this right now. 370 credit. I would like to say I like anything at 70%, right? So if we have 70% of a $5 spread, 0.7 times 5. You're looking at 350 or better on the credit side would be acceptable. The higher that credit is, the less risk you have. You're just going to lower the percentage of profit. If we kept it around 70% of the premium, we're going to average about a 30% probability of profit. So, yeah, it's not a bad trade. I just what I don't know is if we took both of those trades, right? If you have the broken wing call butterfly here and then the broken wing put butterfly here, if price stays in the middle, your risk is about a dollar on each side, or maybe $1.25 on each side, which means you can have a max loss. What's nice is if price goes one way or the other and surpasses that, you take the loss, you take the win. Let's say you make $4 on one side, Frank, and that's your winner. So you lose $1. Let's say you lose $1, whatever, $1 to $1.50. I mean, you walk away with profit. If you win one, lose one, you walk away with profit. If you win one with a profit trap, that's essentially like a multiplier of 2, which
The delta
again,
was 2.
The delta was 2?
Like, I mean, 2%.
So like a 90 some delta, then you probably took like a 90 some delta.
Yeah.
Okay. Okay.
So it's not a good trade, but I figured that the rate we were going in the past like couple of weeks, we're catching up to the all-time highs. So if we do end up doing that, I can see it being done in the next few days, or I'm giving the rest of the week for it to do that. And it's still unlikely, but just look at each day. If we have like a few more days of those green candles, like Monday and Friday, we'll be there. So
yeah, I mean, this whole stretch here, man, between the gaps and the trends, we had several days where we had like 1.5% to 2+% pushes. Some of our big days here, like this was touted as like, oh, one of the best days since 2022. This is also a really solid gain day. This one with gap plus candle, that was like a 3+% day. This one with gap plus candle, that's a huge run to the upside. I mean, we've had like 1 to 3% gains in these markets when you combine the close of the previous day to a gap open and a push on the same day. That stretch is very bullish. So yeah, I mean, this today is going to be, so we're going to be 9 of 12, right? 9 bullish candles I mean, if we stay red today, we're going to be 9 of 12, which is totally fine. I mean, that's still pretty darn bullish. It would make sense. We have a bit of a pullback. One thing I'm looking at right now is we still have a gap right here. We have all-time highs and we have a gap right here. If we're going to stall or pause, the market still has to make up its mind. There's an opportunity to get to the all-time highs, or there's an opportunity to fall into the gap and rebalance a little bit. I'm not here to pick a direction. I'm here just to see how it plays out. Hopefully position both ways. But Frank, exactly what you're talking about is a good trade, man. I'm going to spend more time on that because like I said, I like it where, maybe it's once a week. Maybe it's if it's mechanically a delta based trade, then maybe I can do it like every 30 to 45 days. That way you can collect more credit up front. But again, you deal with like the time factor. But if the market is, extra bullish or extra bearish, you want one of those to be a winner, right? Like the nice thing about the SPX is you're not taking any assignment. I might actually look at the same thing on the ES side. Maybe I do the same thing on ES and trade the futures, and that's also a more like liquid feed. So I don't know if we have to go here. Maybe.
Well, Nick Phillips did not get in here yet, so I don't think we need to go.
Okay.
But I'm thinking, so you go out, say like you pick the average true range for a week.
Yep.
You go out 1 week on this on the S&P.
Yep.
I think you could risk probably like $1.50 maybe.
Yeah, taking 70%, man. $3.50 out of a $5 spread.
But for each of the trades, so you'd probably risk around $3 or $4 to make like 8 to 10.
Well, no, don't think about the profit trap though. So if you pull in 350, okay, so that's going to be your credit.
You're risking 350 in the middle, but if you go beyond those zones, you'll probably make like $1.
Correct. Yep. So if you have 350 on one side, your risk is $1.50. Okay, let's say you do that both ways. So that's going to be your potential loss. So let's say that just price goes beyond one side or the other, and you win 350. Okay, and then you lose on the other side the 150. So you're net $2 on the trade, and you lose one, win one, and you're still walking away with $2 credit. That's really good. Okay, now you do have a dead zone in there for the $1.50 max loss, and that's okay. So if you risk $1.50 and $1.50, like your max loss would actually be $3 if you lose in the middle, right? You've got the the call side here, the put side here. If price goes nowhere, you are going to risk $3 total. That's the worst case scenario, right?
Yeah.
But if we go beyond that, you walk away with $2 because you're going to win one, lose one. And the kicker on that is if we end up finishing somewhere around that expected move for the week, you have what is 350 is probably going to offer maybe $700 to $800 of profit, which is more than like a 2x multiple, which all that really does in the grand scheme of tracking this trade. And let's say this is something you like to do every week or so, or every 30 days, whatever. Any time that you would land that like profit trap would just give you like 2 to 3 weeks of extra profit, and it just like helps pad that bottom line even more. So
Yeah.
I really do like the mechanics of the trade. I just think that maybe the wise way to do it is what we're talking about, which is as we look out for the week and we go, okay, 150 points. Well, if we're starting here, let's just say today is Monday and we're at 55.94. Well, if I go out about 150 points, I put in on the downside, this would be my broken wing call spread. And on the upside, this would be my broken wing put spread. It's the same thing as taking an in the money bull put spread up here or an in the money bear call spread down here. It's the same thing that I do with my my earnings plays when I don't want to overpay for the vol. If I don't want to overpay for volatility, I'll just do a credit spread and see if the market hits those expected moves. The nice thing is, again, I'll go back to if I do the in the money credit spreads and price is up here, right? If I get the in the money credit spreads, I can close out those trades like the day after earnings, the day before earnings. I don't have to wait until closing bell or expiration. On the broken wings, that's the only downside that I've ever had with broken wings or butterflies in general is the way to manage that trade is towards the end of closing bell at that expiration day. That's the only drawdown. But again, if you're beyond the levels, who cares? Right? Because if it fades back in, you got the profit trap. That I don't know. That'd be about the only drawback.
I think that's kind of the nice thing about it is because when you have, say you're doing verticals, so say you're doing an iron condor betting on volatility, you get towards your break-even points and price is not as in the red as it was. So if you're near expiration and you're like kind of at that point, at that break-even point, you're either going to break even or make a little money or lose a little money. But in this profit trap zone, you could
that's the best part.
Immediately go into profit.
Yep.
Which is nice because if you're kind of wrong and it doesn't go as far as you wanted it to, you have a really good chance of catching good profit. But if it breaks those zones, then you have a nice premium that you're collecting.
Absolutely. Let me see something really quickly. I'd like to go out because I don't think you're necessarily going to collect more credit for going out farther. All you're going to do is you're going to move like the put side up higher, the put side. I guess the put side will be up higher, or the call side will be down lower. If you're going out 30 days, the expected move is going to be higher, right? So you're just going out further in price, but you're not necessarily collecting more premium because you're still looking at the same like $5 spreads. SPX is 5 points apart. So let's go out 30 days just for fun here. Let's go out 30 days. I don't want to do the AM expiration. Let's go out to the 20th. And all this is going to do, if I did the broken wing put side and I go out, let's see what this looks like around the 70 delta to start. Okay, so I'm going to go out to like the one standard deviation move, which is around 68%. And maybe that's another thing I do is I just throw it right around that like 30 delta or the 70 delta. So I'll pin that. And I will do this side to this side. So I get 365 for the same thing, 35% chance of profit, which is this is one thing that's kind of nice when you think about the inherent bullishness of these markets. Think about this, dude. We went from a 29% chance of profit to about a 35% chance of profit. Look at the expected move here, Frank. If I go to a 68 delta, which is a one standard deviation move over a 30-day window, the expected move is actually well beyond that. I guess the issue is if I'm not getting my 350, I want like 70% of the premium here. I'd want to try to go out a little bit farther. Let's see if I can move this down a couple strikes. Okay, so if I went one strike further, I'm getting 350 to 375. Like, dude, that's pretty freaking perfect, actually. So, Frank, you've put in a light bulb in my brain today. I'm going to look into this a lot more. So, if anyone is curious, like what we're even talking about here, basically what this is price is in the middle. Okay, let's say price is right here. Just have a little teaching moment here. So, price is here. And if price goes higher, all right, or price goes lower, the position that Frank is talking about is he's putting on a broken wing butterfly, which is, again, silly strategy name for a pretty awesome trade, but you're using puts. And so this is in the money. And so you should try to collect about 70% of the available credit. So if it's a $5 spread, you're trying to collect, 350 credit or more. Okay, now I like the idea of around a 70 delta. So we have the one standard deviation move. And on the put side, and this is another thing too, is if you want to trade both sides of it, you can, because obviously that tees you up for if we have a down week, the call side takes care of itself. But I almost wonder, just with the 30 plus year history, 50, 60 plus year history of, like, if this is all we did forevermore, I wonder like how good this trade is just on the put side, because most of the time if the market's going to surprise, it's slow and steady to the upside, but it's more likely going to test. And this goes back to like the Tasty studies that I've looked at. The market tests the upside of the market, right? So and that's why I said earlier, like Tasty does strangles a lot. So their calls versus their puts, that call side gets tested. So they roll, and it just, you're repairing a call side when really just get the call side out of the way. And so to me, this is like this, I don't know, this to me, it feels like a better trade where if the call side on a strangle is going to get tested, why not just put in a broken wing butterfly, give yourself a profit trap, and if price moves beyond it, you've got a 2-to-1 reward to risk with a profit trap on top of that, which makes it essentially a 4 or 5-to-1 if you end up landing a profit trap ever. So I'm really like excited about just reviewing this more and kind of throwing it out there, because I think there's a lot of good things to take away from this. And you'd want to trade this on an instrument like ES or SPX where you don't have any risk of assignment. That's the only downside.
Because they're in the money puts. Your puts
exactly.
are way above the price, so they could get assigned at any time,
which would
kill your buying power.
Well, I mean, you're going to have a $500,000 margin call if you get assigned on the SPX. So we're not going to do that. And the nice thing with the broken wing is it's defined risk. So because it's 4 trades, right? You've got two puts in the middle that are sells, and you got one wing for the longs. So you have 2 shorts, 2 longs. It all matches up, and it's a cash settled instrument. So there's no assignment risk on SPX, which is pretty cool. Yeah. So hopefully that makes sense on the explanation, everybody.
I'm trying to think too. Would it be better to do this like every week, like to the upside and the downside, or is it mostly just on a week-to-week basis, focus on the upside only? Don't worry about, that's spending a debit on the puts or the call side.
Well, you're not spending the debit. You're just throwing in the extra trade to risk it, right? So I mean, what you essentially need to have happen is you need to have that one standard deviation move, and if you do it both ways, like we talked about mechanically, if you have a winner and a loser, you're going to walk away with about $2 net profit. If you have a winner in the profit trap, you walk away with $6, $7, $8 net profit. But if you add in both trades, I mean, why is it good? Because you don't ever have to have a bias. If everyone's like, well, is it short or is it long? Doesn't matter. You're just trading both sides of it. So, I mean, talk about simplicity. I mean, yes, you're going to sacrifice like, well, I should have just played it bullish. Well, in the event that it goes down, you lose on the put side. So if you want to keep it really inexpensive, I would just say trade the put side, because inherently this market wants to go up. This is a positive drift environment most of the time. And, you're taking calculated risk defined trades that if we have a down week, okay, your max risk is $150 or less. If you get a $4 credit, your max risk is $100. So that's really good. And then you don't have to worry about the other side of the trade. And and this too, Frank. If you have to wait to expiration, how surprised would you be? I'd be not surprised at all. But if we had this for the week, let's say that you took the trade. Here's where price is at, and you have your broken wing. So you do your broken wing up here for the put side. So this is your put BWB. So broken wing butterfly. And then down here, you do your call. So you've got your call broken wing. Oh, I guess, yeah, same thing. So call broken wing butterfly. Now, how often would we see the market if it actually was here by like a Wednesday and you're like, okay, cool, looks like my call side is working out, and then Thursday, Friday, the market does that? Would that surprise you at all?
No. But I think by Wednesday, if it was down there, you'd probably be in a lot of profit, because I'm seeing my value of this option right now is swinging like crazy. So it'll be like, so I have 410 credit.
Okay.
Right now it's at 430, but like a minute ago when I refreshed it, it was at like 390. So if we're basically at that target, I think it's going to be worth, I would say, like 3 or less if you paid 410 for this. And then the spreads would be a little wide, but I think you could still get out. And yeah, if we were testing the downside, I'd probably be more quick to get out than I would to the long side. So if we tested, say we hit the all-time highs today, I would probably stay in.
If we hit the all-time highs, you'd stay in. Okay. So I think that because of the nature of the butterfly trade, I have rarely seen the big prop, like especially the trap part, right? Like the broken wing is constructed like this. If price is here and you have it constructed where you have your credit on the put side, right? So this would be your trade. So Frank collected $4 right here, and he has about an $8 potential profit trap, and then he's risking $1 here. So Frank, I don't think that if it was all-time highs today, I don't think you're actually going to see credit. I think you're just going to see it's going to be trading for, I don't know,
like
man.
zero.
I mean, well, I think you're still going to see like maybe a $3.50 to $3 debit. That you can't necessarily take profits super early on these broken wings, and especially if you're only going out 5 days, if it's a Monday to Friday. But this idea, like, this is a new trade for me. So I think for me, it's worth the testing. I think it's worth the live. I'll place a couple live trades on this. I don't care for me, because if it works, like, I want to see how the mechanics play out. Where if we are noticing in real time that we were at our profit trap by Wednesday, but my butterfly trade wasn't showing that extra credit. If we were beyond that, but it's still showing like a $4 debit, then it goes back to what I said earlier. My only hesitation is this trade is best managed at the end of the day at expiration. Like, that's when this thing is going to be optimum profit, max profit in the trap zone, full profit on the credit. If you're in this zone, you're going to have to manage the trade by yourself. If it's beyond that, it can just expire worthless and keep your profit.
Yeah.
So actually, I did that backwards. If we're doing the in the monies, then that's going to be, you've got your risk here, you got your peak, and then there's your tail credit. So your $4 is actually out here. This is your $8, and then this is your dollar risk, and this is where real price is at right now. So if price goes up and it has to go beyond, right? Beyond, you just keep your $4, but your risk is small if price just stays where it is. Right? Because you pin this thing at all-time highs. So you need that to be your trap. That would have to be by this Friday, that we'd be close to that 56.65. So
right.
I think this trade is, dude, I think this trade's awesome. I really do. I want to get my hands on some. The other thing is, I've talked to Tasty support team. I know they're rolling out their second phase of look back, and so it should be way more robust with some futures options. And zero DT is a big reason they're doing the big phase 2. But also, I can get real tick data using Thinkorswim's on-demand application. So if you go Thinkorswim, they have an on-demand, which gives you go look back at any price point you want anytime, and I could actually take this trade place it on a Monday, and then fast forward and see how it traded through the week. So it's a little bit more cumbersome and time consuming, but I think that's a good way to at least see how this thing plays out mechanically.
Yeah.
So yeah, I love it, dude.
I'm interested to see the results because I really have no idea. I feel like if it's on Webull, they could close me out of the trade at any point if they wanted to. So I don't really know.
That wouldn't be fun. That would not be fun.
I don't know what I'm getting into.
Okay. So yeah, let me do all the work for you. I'll figure it out. I think I'll use Thinkorswim right now since I can place the trades, put them at the levels that I want, base it on the expected move, and then see how I'll go like kind of day by day, and you can kind of fast forward through the time, but they give you like real tick price feeds for every single week. So I think that'd be a cool trade, man. And we'll mess around with it. So if we got a little bit more time, is there any
earnings?
I was going to say any earnings play that you're interested in? I do think so. We've had some pretty big moves. So Toll Brothers today after market, Target, Macy's. I want to look at those. Target's had a pretty big run, or a Target has had some good volatility in the past, and I do think that we said this on Monday morning that retail is going to be a big focus this week. So we have homes with Toll Brothers, we have retail, we have retail also with TJX. That's TJ Maxx. Which has been doing okay. We're actually not that far off the highs with TJ Maxx. Peloton, I mean, I just think that was a COVID freaking meme stock that became hey, it's going to be everyone has a Peloton in their house, and now they're pretty much giving them away for free. And then wholesale is BJ's Wholesale on Thursday. But if I'm looking at this just at a glance, I think Target might be the best one to look at for a potential earnings play. So Target's trading at 143. Look at the last earnings print that we had. So that one was a miss in earnings, but a beat in revenue. But this thing jumped from 155 down to 140. It's a $15 gap. Now we did come back, but that was like, out of the money credit spreads or maybe a vol play could have been pretty solid. Here's another one. Here's an earnings play from 110 to 126 and then a run higher. So two things that I need to see for the trade. What are the spreads? If we have dollar spreads, I'm more likely to take the trade versus $2.50 to $5 spreads because I don't think we're getting a weekly average of about $9.55. And if I go to Option Slam for a second and I see what the average percentage is, let's see what the mean is for the last 10 earnings. 12.5%. So we have 7, 12, 13, 16, 13, 7, 8, 8, 10. Those numbers are all over the place, man. 12.5% out of 143. Let's see. So we expect the weekly trading range to be about $10. 143.32 times 12.57. That's an $18 move expected. The last earnings print we had 10.98. Before that, we had 3 prints in the single digits. So I think, I don't know, man. First, let's check the spreads. Let's just say we go 10%. I'll throw a number out there. Conservatively 10%. The average is 12.5. So let's see if 10% is doable with post earnings. So how often have we gone? And this is on Wednesday before market. And so maybe I'd have to do an expiration. Wednesday before market. So I'd probably not do the expiration on Friday of the 23rd. I might have to go an extra week, but let's take a look at that. So let's go Target. How many times have we hit at least 10% here, Frank? Did not hit 10%. Did hit 10%. Did hit 10%. Did not. Did not. Did not. Did. Did not. Did.
Not looking great.
Freaking 5 out of 5, man. It's like that's what I'm so used to this. I'm so used to this. It's 5 out of 5. It's it's a coin flip. It's an earnings play. Let's find out. So I don't know. So it's a 50-50 for 10%, and that's conservative. How often do we hit 12%? Probably less. But you can see these big ones. I mean, 10 goes to 14, 13 plus, 16 plus, 24 plus, 13 plus. I mean, so I think if you do have that expected move being hit, you're going to see a 12, 13, 15% move, which is a good thing. So we're trading at 143, expecting to see a move of around, let's say 10%. We'll be conservative here.
What was the 10% move? Is that $14?
Roughly, yeah. So 142.97. You're looking at about a $14 move on the week, which is bigger than the expected weekly trading range and slightly more conservative than what the average shows, around 12.5%. So, like I
What
said,
if
I'm
you
being
just,
somewhat conservative.
what if you just pick zones on the chart that aren't necessarily like you're not going by a number value. So like on my screen, I'm not looking at a 14-point move. I'm just looking at, okay, it could come up, open up here, maybe break it if it does well by the end of the week. This would be from 143 to 151 is a 8-point move. And then down here is 137. So also not a 10-point move. But I'm saying, would you do the in the money credit spreads on these?
I would. The only issue, so if you let's say that these aren't equidistant, right? Like this is about an $8 move, and what was this low here? 130 something.
137 to 142 is a
Okay, so you're looking
$5
at like a. Oh, you're
move.
talking. Well, this is a $10 move if you go down to these lows, right?
If you
142 to
if you go and
132.
test down the lows, that's a 10-point move. I'm looking at that gap right there. That's 137.
Okay. Well, if you did an in the money here, but you didn't go as far in the money, you're going to get less premium for that. So if I did a bear call spread down here and a bull put spread up here, this one is 10 points away. This one's only about 7 or 8 points away. I'm going to get less premium. So the idea with me going both directions on the earnings play is I want to try to collect, $3.50 a credit on a $5 spread or 70 cents on a dollar spread. So now let's take this one step further. We are 5 out of 10 for earnings to actually hit the expected move. I like the idea of that, like probably a $15 zone. Like if we did a 10% move, we're looking at about a $14, $15 zone. Now let's look and see how the expirations line up. So if I go to Friday, we do have dollar spreads, kind of. I had a feeling that we're going to get, look at this. If you go up 7 or 8 points, you start to get the 250 spreads, which makes this a little bit sloppier. If you go out here, same thing. So once you get above 150, they start to get the 250 wide spreads. That doesn't make it as good. Let me see here. I don't know. Maybe I'll try this one on target. If I do a at the money, and I sell the 15 wide. So if I sell the 157.50, and then 15 wide would be 128. So I'm expecting about a $14 move, and that's somewhat conservative. I pay $9.48 for an expected. I mean, $14 is a 10% move. I think that's pretty conservative. I actually think I might just take this trade with easier vol. So give me a second to think through this trade. If I just do the in the money credit spreads, I would do the 152 by 150, collect a $1.82 out of a 250 spread. That's not too bad. This is actually way cheaper, dude. Holy crap, that's so cheap. 180 divided by 2.50. That's 72% of the premium. I like that trade. And that's going up around $9, right? So 150, 250, about $9. So let's do a 134 by 136. So I'm risking on this trade here. Let me get this one out of the, let me take this one out for a sec. So 134 by 136, I'm getting $1.77 out of a $2 spread. Again, and it might be high. We might not get filled there, but that gives me a $2 spread. This one gives me a 250 spread. It's close enough. I'd get $3 for both trades. I'm risking $2, and let's see.
If you do that broken wing butterfly with the calls, where are you looking till next week or this week?
If I went out to next, I mean, if I went to this week, we'd have to have like the instant reaction, which I'm okay with. I mean, either way, like it's the same strike either way. So if I want to go just to this week, I guess if I go to next week though, like the premiums might be a little bit better. I do run the risk of a big move one way or the other. If I do credit spreads, I run the risk of assignment. If I do a broken wing, there might still be an assignment leg as well. Like it might assign me, one of the short puts.
That's true.
Especially if we have a downward move, I can get. I mean, it's not a big deal, but I can't necessarily repair the trade the same way in a broken wing as I could a credit spread. Like I'd have to take a portion of the broken wing and like parcel it out and say, okay, I'll take a loss here, take a credit on the long call or the long put, I guess. It'd be a little bit nastier if I got assigned. So let me think about this. So if I went out to this Friday instead, so we get like the instant reaction, I do the 152. So I can still get $1.80, $1.85 for that trade. I'm actually really happy with that one. And then go $9, so the 134. So I get 335. And again, what I like about this trade is if you look at the expected move, this is about a 1041 expected move in the Tasty platform. If it goes beyond that, if we're getting 331 for a max risk of about $1.70, so let's say on one side I win. Okay, I'm going to win about $1.85. And on the other side, so that loss is going to be about 65 cents. Okay. And then the other side, I pull in about $1.70 and I risk about 30 cents because it's a $2 spread. So if I win on one side, I'm going to look at if I, win here and I lose here, I walk away with $1.50. If I win here, lose here. If I want to wait to expiration, I walk away with probably $1.10 to $1.30 of net profit. Not a bad trade. Yeah, not a bad trade. Let me see if this will fill. There you go. Retail educators. All right, price action. Let's try to get I'm going to try to get 325 in this, Frank. The spread's getting pretty wide. Let me see if I get 325. 325. Let's go. All right, I'm gonna try to get this in my account. So 325, not filling. Well, 325 is too high. I'm showing a mid here at 280. I'm not taking the trade for that. So 325. Ugh, well, that just got a little bit more complicated. All right, let's try this from a different angle. I'm gonna try the broken wing.
I have an idea.
Okay, I was gonna try the broken wing around that 150.
Yeah, do the broken wing on the call side at 141, sell the 2 calls at 142, buy 1 call at 144.
Okay, so it's a broken wing. What do you want the sell price to be?
Buy 1 call at 141.
Okay.
And then sell 2 at 142.
Okay.
And then the last leg is 144.
Okay.
That's
so
50 cents.
Yep.
The other way, if you were to do this exact same thing, but on the put side, where one of the legs is in the money or out of the money, it's also around 40 or 50 cents.
Okay.
And if price barely moves, you make the max.
Yeah, price barely moves. Now, do you max out on both of these? Because you'd have like the trap on both?
If it doesn't move at all, like if it stays at that dollar, you'll lose everything. But if you
I would almost consider this. If you pin it, let me do this on. So if I'm gonna freeze this one for a second. So let's put these here. So if I do a put butterfly, fudge. So call butterfly. We did the 141, the 142, and the 144. Let me write that down. All right. So we do a +1 at 141, -2 at 142, and +1 at 144. Okay, and then on the put side,
I'm sending you the setup just so I don't forget.
Yep.
So I can just look at it. But so what I got on the put side, which was, one leg is out of the money, the two others are in. That's 50 cents credit. The call side, which is the downside in this case, is 45 cents. So the max loss was $58 on one contract, and then $48 on the other contract. So about $1 some change, I guess.
Right. But
Could
if you
figure
win,
that.
if you win one side, but if you the likelihood of this trade is you win one and lose one, you're not making enough, right? If you do this, you're going to make about 50 cents on one while you're also risking 50 cents on the other. So if price makes a move with
They
earnings, we're going to be
cancel out then.
it's going to cancel out. Yeah. So what I was looking at is if you want to do it this way with the profit trap in the middle, one profit trap kind of pays for the other, where you can risk your 50 cents on one, walk away with $1.50 on the other. But I don't think it works. I think if you have to do the broken wings, we'd have to go in the money on both sides and try to give yourself a hole in the middle, which is always that trade off with options. It's like there's never an option trades that I've looked at where I'm like, this is the greatest thing ever, because there's always a trade off. So I think we're onto something like with the in the money stuff that we can play around with. But if it cancels out or there's a gap in the middle and there's still risk in the trade, like that's always what options end up being. Is like it just shows you're kind of priced for efficiency, and you're just looking to see if you get a slight edge in price and probability and that's also why when you looked at the chart, I didn't just subjectively say like, well, I think it can go here and go here. Those would be logical technical levels. Well, with earnings, man, it's not really technical. Like earnings is like, who knows what the expected. I look at earnings like, what's the expected move based on what it's doing? Like every time we've seen earnings the last 10 prints, we average about 12%, 12.5%. So that to me that's the way I trade earnings. Is I keep it like very much data driven, where this is what the stock has done, regardless of what bullish, bearish environment, whatever IV is, it doesn't really matter. This is what the earnings does. So
when you work from home, does Benji always want to like hop up on your lap?
Of course,
because that's what Gus does. If I'm ever at home, he's just whining the whole time, just looking up, waiting to get on.
Benji just like hops up on my lap, or he'll sit on the couch and just stare at me the whole time. So yeah, this dog's pretty. He's kind of a stalker.
Yeah, I kind of wasn't listening to what you were saying there because of Benji.
All right, he's a huge distraction. I know. Look at that guy, huge distraction.
But yeah, I mean, it hit me that it doesn't make any sense to take that trade because they'll just cancel each other out. But I do like, outside of earnings, I do like checking these technical levels on the S&P or the NAS and seeing, okay, maybe by the end of this week we could be here or further. And if we do the average true range on the S&P, I mean, it's giant. It's like 140 points.
Yep.
So I think you could go like 100 points in either direction and just like at the beginning of the week and say like, okay, it's going to go here or here by the end of the week.
Yeah, I think so too. So here's what I'm going to do, Frank. I'm looking. So I think I might do actual vol play on target because it's not that expensive. If I did a 144 long and I sell the 155, I do a 142 long and I sell the 142 or 132, I'd pay $7 for what's expected to be a 1050 move. If I go a little bit wider, that's okay. But I think this is fair for it's a Wednesday. So it's tomorrow morning for earnings, and then I'll manage this by Friday. If we see a big ridiculous move, I mean, the sell side of the option trade might hurt a little bit. If I go a little bit wider, let's go 44 to 55. If I went a little bit wider, I give myself another, that's $13.50 of upside. And if I go maybe down here to 130, so I'm paying $7.92 and giving myself about $2.50 to $3 more of profit. So I think this is the trade, dude. We got 1058 expected move. I calculated even a 10% move conservatively gets us at $14. I'm going to try to get myself, from a 7. I'm going to get filled for $7.95. I'm going to take this trade. $7.95. We're going for everybody here, so we're going to get some target action. Oh, don't not fill me, you jerks. $7.95. Hopefully I get filled for less than $8. Hopefully less than $8. Filled at $7.96. Okay, that's not bad. All right, so let me get these in all the accounts. All right, I think I'm just gonna have to bump it up a couple cents more. So 96, 97 filled. All right, here we go. There we go.
So if price were to open up lower beyond your target, or
Okay.
just I guess it's at your target, would you just close out immediately?
Yep, pretty much. Let me
Okay.
make sure I'm just seeing where I'm getting filled at here. So that one's filled.
But
Similar.
if it was above price at your target, would you get out immediately as well?
Yeah, most likely I'm looking at it this way. I'm in for, $8 or so. And if I get, I'm just going to look at my profit targets. If I'm up 15% return on capital, 25% return on capital, I'm just going to take the profit. So if I turn an $8 debit into a $9 or $10 credit, I'm just going to take the profit.
Okay.
So nothing. I mean, I know that I can max out, and that's the nice thing is I'm giving myself a little bit more upside, and I can max out at like 12. So I can max out on the upside at 13.50 by expiration. I can max out on the downside around $12. So I mean, if I'm getting this trade, let me track this. So I'm in for 797. We'll talk about it tomorrow. I mean, earnings is tomorrow morning. I can manage the trade whenever I want to, but if we have a big move through the expected levels, if we're up above 157 or we're down below 130, I'm probably going to take the profit and I should be seeing it trade for like, I'm assuming like $9.50 or $10 of credit. And if that's the case, I'll take the profit. I'm good with that. So little trade.
Palo Alto? Because that one moved like crazy.
It did or did not?
It did.
It did? Okay, well, let me take a look at it before we go. All right, so TGT earnings play. This is an 8/23 expiration, and I'm doing a vol play. So at the 144 by 157.50 and the 142 by 130, 7.97 debit. And I'm trying to get hopefully, I'll say like 897 credit or higher. And that would be what? If I got $1 out of this trade, gives me 12.5% profit. So, I mean, I like 15 and 25% take profits. If those get hit, I'll just take profit and take it. What did PANW do?
It's up 8% today.
Oh, heck yeah, dude. All right, let's go to that. So PANW. And I do have some positions here. Let's go. I think I got this in everyone's account. PANW is a credit spread trade. So my 1, 2, 3, 4. I got in for a 710 credit, and right now it is showing a 570 debit. I can take the profit at I'm going to close it out for, see if I get like 550 or less. Not filling. So I'm going to take the profit in this one. Let's go 575. That's about $1.40. Son of a gun. The spread's pretty wide. 585. You piece of crap. All right, I'm just going to play around with the prices, but yeah, that's a big move. That's what I needed.
Yeah, I can't.
All right.
It's hard to tell what's going on your screen.
All right.
But you're just trying to get filled.
I'm trying to get filled. So I got filled for a 710 credit, and I'm trying to get filled for a debit to make the dollars. The mid price is 560 right now. So I'm just going to cancel that trade. Let's see where we're at. So right now we're trading at 373. My bull put spread is at 365. So I'm still like $8 above current price. I would be a little bit more concerned if this was up to the highs, but it's not quite there. So maybe this has enough to like push a little bit higher. I just don't want to see this like fade the move and all of a sudden I'm right back in the freaking middle. So I'm going to try to close this for a profit and try to get at least $1 out of this. Let me see. I got filled for 710. I just tried to do a debit of $6 and it didn't take. So I'm going to try to get like $6, 605, 610. I'll probably leave that for the day. So that'll be that. I need to run, dude. I'm a little bit late to my trading room, so I'll bounce for today. Dude, you and I need to talk offline. Let's. I want to spend some more time on that broken wing butterfly stuff. I think that could be a really, really good structure trade.
Yeah, I'll keep looking at setups and maybe figuring out what could be the best way to set a broken wing up like that. But
okay,
I think it's mostly for volatility. If you wanted to trade both ways, but
Yeah,
don't know.
it's a very
I'll think
inexpensive
about it.
way to trade it though. That's what I like. It's not a cash assign. It's a cash secured asset that at closing bell. There's no risk of assignment. There's no like post market pre market stuff. It's also it's a non assignable asset. So option trade wise, like it just expires. I like I said, the only drawback is that broken wings are typically going to be managed towards expiration or like the day of expiration. But yeah, I think there's ways to turn that into like a very simple make money every week and just go on the expected moves and probably make more money on the put side just because we have a positive drift instrument. But it's still not. Look, it's not a bet. Look, this trade, this trade, you're pretty much making me like the trade enough that this trade right here that paid really quickly in the week. Is way more complicated than if I just did 2 broken wing butterflies. That's a little bit easier to manage than this, right? This is 8 legs, and I've got to manage one side and the other side, and I've got to add it all up. The broken wing is like I can just open it, close it, and be done with it. So it's, yeah, I don't know. It's a little bit simpler. Plus, the profit trap on the broken wing would give me like kind of this look. If I have the broken wing, it's like you've got your tail credit, you got your profit trap, and then you have your risk. And then you have your profit trap in your risk, right? So that's one thing that I can do is let's talk about this, and I'm going to build it out here. This is what it's going to look like on a risk graph. I've got my peak. I've got my credit on the in the money call side. Got my credit on the in the money put side. I've got my trap here, but it's definitely a wider dead zone. But the cost of the trade is, taking it for a credit. So time actually works in my favor, but we're looking to see how wide does price have to go. I guess that's the downside is if price does nothing, we're taking risk on both sides of the trade, right? So
Yeah.
I say we pin this. Let's talk about this more tomorrow because I will construct this trade. We'll play around with the risk graph tomorrow.
Okay.
Cool. All right, dude. I'm gonna run. I got to jump into the trading room, but this is great, Frank. And man, good stamina today, bro. Rocking it out until 11:45.
Yeah. Don't get used to this.
I won. I guess I should just feel lucky and privileged to be working with Frank.
Well, thank
All
you. I'll talk to you soon. We'll figure something out with this trade setup.
All right, sounds good. Thanks, everybody. Have a good day.
Bye.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.